Welcome to our daily Bitcoin update, where we share our market perspectives, trading, and volatility strategies. We are a small team of investment professionals with decades of experience in traditional finance. Our careers span roles as traders, market makers, and portfolio managers for top-tier institutions. As proprietary traders of digital assets, we have developed a proprietary methodology combining qualitative and quantitative factors, merging a multitude of theoretical constructs from traditional finance and technical analysis. Our methodology translates how the pricing mechanism is influenced by market maker predatory tactics and trading algorithms with a focus on market structure, liquidity, volatility, and time-price-volume relationships. Please note, our content is not investment advice or is this an educational channel. It is intended for entertainment purposes only. Our content is clickbait-free with no affiliations to exchanges or paid sponsors. If you suffer from analysis paralysis and prefer short-format market perspectives and rationale for our trade setups, stay tuned and enjoy. The highly anticipated CPI data yesterday provided the catalyst to break out of the near week-long contracting range-bound price action. The hot print, in an already skittish backdrop on the back of hawkish Fed minutes the day prior, led to subsequent rapid descent precisely to liquidation levels, for only a brief reaction at 61.5k and onward to more concentrated seasoned depot of liquidations below 60k. Price found support at 59k after liquidations provided an exit to shorts, helped by both limit order buys residing below 60k and fresh demand from speculative longs evidenced by fresh stop-loss liquidation levels below the overnight low. Local price action remains corrective to bullish long-term market structure, looking to indications of resumption of trend higher. In addition to aforementioned liquidity concentrations and proximities, cumulative volume delta of market futures orders continues to show absorption of shorts, forming a divergence between price and delta, which also raises the probability of continuation higher in coming session. This is consistent with whale addresses ratio of exchange withdrawals to deposits below 0.5 indicating accumulation. Also positive for valuations is recent indications of US presidential election polls showing a potential landslide victory for Trump in the making, namely due to Trump's now positive margin in the majority of swing states. This is positive objectively due to BTC traded highly correlated in recent months with the probability of Trump victory. The market perceives Trump's policies to be more conducive to economic growth, lower inflation, and less regulation. Looking to volatility markets for further clarity on expectations and sentiment, the implied volatility term structure normalized overnight with volume down in short expiries following the subsiding CPI event risk. The call-put skew is also slightly positive, as calls again went bid versus puts on the back of constructive price action in the Asian session. In terms of strategy, we executed our trading plan highlighted in yesterday's update, moving from neutral to marginally long at 61.5k and scaling again into longs after price tapped liquidity at 59.5k. However, our tactical long bias remains conservative given the balance of risks, namely the potential for escalation in the Middle East conflict. For this reason, we have implemented tail hedges via OTM put options. Our swing targets to the upside are 65-66k as the next likely reaction zone and potential TP level. If a negative catalyst emerges and price reverts lower, depending on the nature of the catalyst, 57.5k is the next level to which we will look to potentially increase our long exposure. Given long-term bullish market structure remains intact and invalidation levels not within close proximity, our bias over the long term into 2025 is to higher prices. Thus, we prefer to tactically allocate risk between neutral and long rather than tactical shorts. As always, do your own research and analysis. Be safe, and good luck in trading.